Welcome, listeners, to today's episode of Furniture Industry News, your go-to source for the latest in the furniture industry. Today, we have an engaging lineup of topics covering recent July 4th sales, an FTC objection, store closures at Big Lots, and Bassett's latest earnings report. Whether you're a retailer, manufacturer, or just someone interested in the world of furniture, there's something here for you. So get comfortable, and let's dive right in. Let's start with the July 4th sales in the furniture retail sector. This year's holiday sales presented a mixed bag for many retailers. While some saw modest increases in traffic, others struggled to meet last year's figures, primarily due to economic factors such as rising inflation and increased costs. For instance, Gill Brothers Furniture in Muncie, Indiana, reported beating last year's margins with their triple sales tax savings incentive, although overall sales were just as expected for this period. Motion Upholstery turned out to be one of their star performers, maintaining steady sales alongside their mattress category. Across the Southeast, 1915 South, which operates Ashley stores, saw increased foot traffic. However, the average purchase amount per customer dipped slightly compared to last year. Shoppers seemed to lean more towards lower-priced items, suggesting a cautious consumer attitude amidst economic uncertainty. Vice President of Merchandising and Marketing, Bill Dixon, mentioned that upholstery and motion furniture held their ground as bestsellers, even if customers opted for budget-friendly versions. Home furniture in Minnesota experienced decent business and footfall, thanks partly to some rainy weather that drove more people indoors. Although the turnout wasn't as high as hoped, they managed to see an uptick, particularly in outdoor furniture and mattresses, which were heavily promoted. Interestingly, some retailers chose to stay closed on the actual holiday, but made up for it over the surrounding weekends. For example, Boston Interiors saw solid sales in upholstery and dining furniture during the long weekend, boosted by some wet weather that deterred outdoor activities and led more people to shop. Cleveland Furniture Company reported a significant boost in their leather motion seating and sectional categories. Partner Paul Serino Jr. highlighted that the in-stock messaging resonated well with customers ready to make immediate purchases. Despite lower footfall, their written business saw a notable increase. Retailers like Bostic Sugg Furniture in North Carolina also made strategic moves, promoting special deals and aggressive pricing to drive sales during the weekend. Their success underscores the importance of targeted promotions and understanding consumer behavior. Overall, while the July 4th holiday isn't traditionally as significant as Memorial Day or Labor Day in terms of sales, retailers strategically utilized promotions and leveraged economic conditions to their advantage. Despite various challenges, the mixed results were seen as satisfactory by most, especially given the current economic backdrop. In our second segment, we dive into the ongoing feud between Tempur Sealy and the Federal Trade Commission over a massive $4 billion acquisition of Mattress Firm. The FTC has challenged this acquisition, expressing concerns over potential negative impacts on market competition. However, Tempur Sealy has issued a robust response, firmly disputing the FTC's objections. Tempur Sealy argues that the FTC has fundamentally misunderstood the breadth and complexity of the mattress industry, particularly the diverse channels through which mattresses are sold at various price points. In a detailed 31-page filing, Tempur Sealy outlines how the FTC has overlooked key aspects of the industry, including direct-to-consumer sites like Amazon and the wide range of price points beyond the so-called premium segment. One of the primary arguments put forth by Tempur Sealy is that the acquisition would actually be pro-competitive. According to the company, the deal would enhance competition, foster innovation, and ultimately reduce costs, all of which would benefit American consumers. The filing emphasizes that the FTC's complaint fails to raise any significant concerns about the loss of direct competition among mattress manufacturers. Tempur Sealy points out that the complaint identifies only one other manufacturer, Serta Simmons, that uses Mattress Firm as a nationwide retail outlet. In this context, Tempur Sealy asks a pointed question. What exactly is the complaint about if it doesn't pertain to the vast majority of mattress retailers or manufacturers? The company argues that the FTC's concerns seem to be limited to a tiny handful of mattress manufacturers and are not reflective of the broader market dynamics. Tempur Sealy also refutes the notion that its acquisition would limit access to Mattress Firm, asserting that the FTC has not provided concrete details about Mattress Firm's market share or how the merger would impact it. The company underscores the extensive competition within the mattress industry, citing numerous other channels and retailers that sell premium mattresses, including big box stores like Walmart and department stores like Macy's. Moreover, Tempur Sealy highlights its intention to maintain Mattress Firm's multi-branded merchandising strategy. They draw attention to their past retail acquisitions, such as Dreams in the United Kingdom, which have successfully maintained a variety of brands post-merger. Tempur Sealy also pledges to continue reserving space for third-party brands at Mattress Firm stores and notes supply agreements with various mattress suppliers, emphasizing its commitment to not disadvantaging other suppliers. They go further to address omissions in the FTC's complaint, stressing that it lacks a clear product-market definition. Tempur Sealy points out that the complaint does not specify price points, market shares, or even identify all the relevant manufacturers and retailers. They argue that a proper assessment of actual competition in the mattress industry would discredit the FTC's concerns. The ongoing legal battle saw Tempur Sealy meticulously responding to the 121 allegations outlined in the FTC's complaint. A pre-hearing scheduling conference has been set, indicating that this issue is far from resolved. It's a high-stakes standoff in the mattress industry, with significant implications for market competition and consumer choices. Stay tuned as this legal showdown continues to unfold. Big Lots has made the tough decision to close 35 to 40 of its stores this year. This move is part of a broader strategy to address underperforming assets during a challenging financial period for the retailer. The store closures will reduce their locations from 1,392 to around 1,352 by the end of the fiscal year. Though this might seem like a significant reduction, it actually represents a small fraction, less than 3% of their total store footprint. Despite the closures, Big Lots continues to be a major player in the furniture retail industry. Why did Big Lots decide to close these stores? The company has experienced substantial financial challenges, including a net loss exceeding $205 million for the first quarter and a total debt that has ballooned to $578.6 million. With these issues looming large, closing underperforming stores appears to be a logical step to help stabilize the company's financial health. Interestingly, furniture sales remain a core category for Big Lots and have held up relatively well compared to other segments. While overall sales have experienced a downward trend, the decline in furniture sales was less severe, dropping by 6.6% compared to a 10.2% decline in overall sales. This is notable because furniture has been one of the worst-performing retail segments tracked by the government in recent months. Additionally, the performance of furniture in terms of same-store sales was better than most other categories, with only a 5.6% decline compared to a near 10% drop in overall same-store sales. Why is this important? The resilience in furniture sales gives Big Lots a glimmer of hope amid the broader financial turbulence. The company's strategy with aggressive promotions and its well-known Broyhill-branded products returning to normal stock levels have certainly played a role in mitigating the downturn in furniture. However, the question remains, will these closures be enough to shore up Big Lots' business in the long term? The store closures present a double-edged sword. While they are expected to cut costs and help stabilize finances, they could also create opportunities for competitors to move into the vacated market spaces. Other retailers, especially those value-oriented and focused on furniture, are likely to benefit in the communities where Big Lots is shutting up shop. Moreover, the economic landscape shows no easy roads ahead. The retail environment remains volatile, and consumer spending, especially on big-ticket items like furniture, is still subdued. Despite Big Lots' extreme value proposition and its aggressive promotional strategies, convincing consumers to part with their hard-earned money on pricey items remains a daunting challenge. In summary, while the store closures are a necessary and significant move to manage underperforming assets and reduce debt, the effectiveness of this strategy will depend on multiple factors, including how well Big Lots can maintain its furniture sales and whether other retailers capitalize on the market gaps created by these closures. It's a critical juncture for Big Lots, and only time will tell if these efforts will pay off and if the retailer can weather this storm. Lastly, let's review Bassett Furniture's Q2 earnings report, which has certainly garnered much attention within the industry. The report revealed a notable 17% decline in sales from last year, marking their fourth consecutive quarterly loss. The company is taking significant steps to address these challenges, which is crucial for stakeholders to understand. First, Bassett announced an immediate restructuring plan aimed at right-sizing its cost structure and setting the stage for future growth. Key elements of this plan include reducing its wood manufacturing footprint, optimizing inventory, and discontinuing unproductive lines. Part of the restructuring also involves investing in refurbishing current retail stores, which could make them more appealing to consumers in the long term. An additional and somewhat surprising move was the closure of Noah Home, an e-commerce furniture business that Bassett acquired just 2 years ago. Despite initial optimism, Noah Home didn't manage to meet sales growth expectations. By winding down Noah Home, Bassett hopes to concentrate more on its traditional and core business operations. One bright spot in Bassett's portfolio is their True Custom Upholstery program. This offering has been highlighted repeatedly by company executives as a key differentiator in the market. Bassett's custom upholstery program allows consumers to choose from a variety of frame lengths, arm, back, and base styles, as well as multiple fabric and leather options. With recent additions such as leather upholstery, this segment is performing well despite broader economic challenges. The closure of Noah Home will result in some immediate cost savings, but it remains to be seen how this will impact Bassett's e-commerce strategy. The company admitted that running a pure-play e-commerce business for furniture is challenging, an insight that might help them refine their approach moving forward. Moreover, their retail backlog has shown signs that the worst might be over. Written orders were only down 2.5%, suggesting that the retail segment could be stabilizing. However, without any new stores planned for the year, the focus will be on improving existing locations. From a broader perspective, Bassett's troubles are exacerbated by the macroeconomic environment. The housing market remains sluggish, and consumers are spending more on experiences rather than home furnishings, a shift from trends seen during the COVID period. Yet Bassett remains cautiously optimistic that their strategies will lead to improved market share and better shareholder returns in the long run. In summary, Bassett's Q2 earnings report is a mixed bag of challenges and strategic efforts aimed at turning things around. While the immediate financial picture is far from rosy, the company's focus on restructuring, streamlining operations, and enhancing their custom offering shows a blueprint for potential recovery. That's all for today's episode of Furniture Industry News. We hope you found these insights valuable as we covered the latest trends and developments in the furniture industry. Don't forget to hit that subscribe button to stay updated on all the latest happenings and in-depth analysis. We'd love to have you join our community of listeners who are passionate about staying ahead in this dynamic field. Thank you for tuning in, and we'll catch you in the next episode.